Why is it in our community that our credit is just bad?
Unfortunately, most people don't have financial education. A lot of people, when they first heard of a credit card, was when they went to uni. When they see this free money, see these student credit cards, they're thinking free money. They literally splash the whole thing and think that nothing's going to happen. If you've got a phone contract and you miss 1 month,
It's there.
it will be reported and that will stay there for 6 years.
I've seen a lot of people that have said, my mom's ruined my credit or my dad's ruined my credit. Welcome to Insight with AYO. I'm your host, AYO Noble, and today we have an amazing guest. Today we're going to be talking about everything surrounding credit and debt and what to do to avoid both or to leverage both. Credit and debt is something that has crippled a lot of people financially. It's things that have caused a lot of issues in relationships. So today, with my good friend Joshua, who's actually going to break it down to us and give us all the insight that we need around credit and debt and what we can do to make things better. Welcome to the podcast, Joshua. Appreciate you coming.
Yeah, thank you for having me. Definitely honored to be here. And yeah, hopefully we can teach and educate people about the importance of credit and debt.
Brilliant. So without further ado, why don't you introduce yourself to the people, let them know who you are, what you do, and yeah, we'll get cracking.
Yeah, so my name is Joshua, finance coach. I help people better understand taxes, credit, and business setup. So
that's you in a nutshell.
That's me in a nutshell. Yeah, that's
perfect. So he's being modest right now, but he's incredibly knowledgeable about credit, debt, taxes, everything to do with the financial aspects of your business. Josh is the best guy. So cool. So Josh, we're just gonna get straight into it and keep it real. Like, you see the thing about credit,
Mm-hmm.
A lot of people have credit. I mean, the world runs on credit, essentially.
Literally.
Now, you have credit for all kinds of things, whether it be credit for, credit cards, finance, cars. People take credit out on their sofa, their bed, their television.
Literally.
And you also, getting loans is a form of credit.
Yeah.
Now, why don't we start by, first of all, educating people on the purpose of credit and, what we need it for, and then we'll go into it from there.
Yeah, good question. So, there's different types of credit and there's different reasons people borrow it. Unfortunately, most people don't have, financial education to start off with. So a lot of us just get thrown out there into the world. And the first time we hear of credit, we unfortunately think that this is free money, not knowing that credit is all about trust. Whenever you want to borrow money from a bank, which is what it is, you're actually borrowing money. You ideally want to be, not even want to be, but you want to reflect that you are a trustworthy person, right. which is why we all have personal credit reports. So if, for example, you get a credit card or get a loan and you have a missed payment, this will reflect on your credit report. And what it shows, even before a bank will gets to know you personally, once they see your report and they see a missed payment, they're thinking this person is not as reliable as someone else who's never missed a payment in their life. So credit is about borrowing money and ideally using it for something that you could otherwise maybe not afford, or if you just didn't want to use your own money for, another reason. And usually that's where we are talking about leverage and doing more with credit than, as opposed to using your own money. That's what it's all about.
Okay, cool. So credit is, should we say that credit enables you to get access to cash that you don't necessarily have, or you do have, but you don't want to use.
Yeah.
And there's a speed element to it.
Correct. That's
cool.
Right.
So why is it in our community that, our credit is just bad?
Yeah. Again,
in a general basis, because obviously there's always going to be that person that just never uses deductive reasoning and says, hey, but mine is not bad. No, if it doesn't apply to you, not you. But
correct.
For maybe the vast majority, why is people's credit bad? What's one of the underlying reasons, factors? Where are they going wrong? Yeah,
so again, education is missing. So people don't even understand what they're doing when they, first of all, get a credit card or don't get a credit card. Even that can have a problem as well, or when they get a mortgage or a loan. So the things that usually cause errors are whether there's an informational error. When I say that, I mean let's say, for example, you live at 3 something road, but then your credit report says that you live at 3A something road. That's an error on your credit report. And if you then, for example, go to apply for a credit card and it's an automated application, you would be disapproved immediately, rejected automatically. And for you, because if you don't understand why you're being rejected, you're thinking, let me just try again. And if you then try again and get rejected again, you now have 2 rejections on your credit report, which doesn't look good compared to someone that has their credit in order, where their name is spelled right, their address is spelled right, their date of birth is in good order. And that's just one of the common things that affects a lot of people, just not checking their credit report and ensuring that all the information is consistent.
So essentially, can we say that credit and the purpose of credit is to essentially systemize and streamline the process when it comes to lenders deciding who they want to lend to.
Yeah.
And it also gives them, a very, should we say, unbiased way of doing so. So that way it's like, look, these are the metrics and the numbers involved.
Yeah.
We don't know. Can they see the name of the person and stuff like that?
They can see the name, definitely.
Okay, so they can, if they want.
Yeah.
Maybe. And is it something that's done via, AI? Is it a machine that decides, or is it like
question.
a group of people that are sitting down and going through this?
Yeah, so usually it depends on the type of credit you're going for. If it's going to be a credit card, nowadays most of it is an automated application. So it won't be someone reviewing your actual credit report and therefore giving you an answer. But there can be cases where they actually do a manual or a human assessment, a manual review. And from the information that they see, they make a decision whether to accept you or reject you, or even how much to give you in the first place. So it definitely varies. But most things, not most, credit cards, loans, a good number of them are automated.
Cool. The reason why I ask is so that for the people that feel maybe
Yeah.
their name will give away their nationality or ethnicity, and they think that might play against them. I just wanted to know, is it that could come into play? And it's like, look, your credit is perfect, but because you have, a very African name, that they've decided against your name rather than the other metrics that are more important.
Yeah. So again, because most of it's automated, that usually shouldn't be the case. But one place where that could be an error is if you've got a foreign surname, an African surname, an Asian surname, and your surname is spelled wrong, or even your first name is spelled wrong, because your information isn't consistent. If you now apply for credit and there's an error in how your name is spelled, then that would unfortunately affect you. Cool. So with credit, one thing that people have to do is take responsibility for themselves to go and review their credit reports and see that there are no errors. And then from there, it should be fine.
Me personally, I've built my credit from very poor all the way to excellent.
Crazy.
Hold on. Yeah, so I've done it personally. And one of the main things that you see here that causes people to have bad credit is sometimes the works of their parents or the generosity in their heart.
Yeah.
I start with the parents. I've seen a lot of people that have said, my mom's ruined my credit.
Yeah.
As in, or my dad's ruined my credit. Yeah. And I'm like, how? And they're like, oh, my mom was taking out phone contracts in my name. Then when she just doesn't feel like having the phone, she just cancels the contract and just thinks nothing will happen.
Yeah.
And I've also seen and heard people say, there's been a lot of misconceptions where they feel like, well, it doesn't matter that my credit's ruined because I don't plan to ever get a mortgage anyway. So they think that credit is solely for borrowing at, a substantially large level.
Money. Yeah.
Could you explain what other areas that credit plays a part in and how that misconception of if I'm not going to ever borrow from the bank, then it doesn't matter?
Yeah. So if you are fortunate to be that person where you don't need the bank's money, then you could be fine. But most people that are first of all educated financially would know that leverage is super important. If you want to get things done, you ideally want to use your money, but other people's money as well to get you there quicker or to move further. So, and a lot of people would probably think that when they're younger, I don't need a mortgage, or I won't need it. And then at some point they realize that they actually do need good credit to get a mortgage. And not just to get a mortgage, but to get a mortgage on a good term. So for example, if you've got poor credit and you go for a mortgage, they're going to give you unfavorable terms, whether it's, higher interest rates or just actually a longer term overall for you to make the repayments, which ends up costing you so much more compared to someone that's got excellent credit. So, and the thing to know about that as well is if, for example, you now change your mind, you want to get a mortgage next year, but you've got negative markers, usually most of them take 6 years to come off your report. If you made a mistake when you were 18, it's staying there till you're 24, which is crazy. And most people don't even realize it. So again, education is the key. If you don't know, you just don't know.
And what are some of the negative markers, for example?
Yeah, so like a late payment or missed payment. So if you've got a phone contract and you miss 1 month,
It's there.
it will be reported and that will stay there for 6 years. If you've got a loan and you miss a repayment, that would also be reported as well. Yeah, there's a number of few things, but yeah, missed payments are a problem. And one thing that could also happen is if you've had so many missed payments, maybe like 3 to 4, some different lenders have different criteria, but 3 to 4 missed payments, and then the lender closes your account, you get something called a default. And that's even worse than a late payment. And that stays on your report again for 6 years. So if you are 20 until you're 26, that's going to be there for the whole time.
So even though your
avoid it.
affordability has changed all that time and you actually have the money for these things,
This is it.
they will still likely decline you, or like you said, you'll get, if they do accept, you have unfavorable
terms.
Even though what happened was 3 years ago and you've moved on from it.
Yeah.
Cool. So another thing that I think that people don't understand about credit is that in order to have good credit, you need to have credit.
That's right.
So, but in order to get credit, it's kind of like how employment works, right?
Yes, it is.
Oh, you need experience to get a job.
Yeah.
But without a job, how am I going to get experience?
This is it.
So it's almost like you need credit to get credit.
Yeah.
But without credit, how am I going to get credit?
Yeah, exactly. So yeah, that's where like you want to start off somewhere. And ideally, so the ideal is that you are educated before and your parent or someone just older gives you like the first steps to get credit. So a lot of people don't even know is that even current accounts get reported to your credit reports. Most of them do anyway. So for example, you could be 18, 20, very young and start by getting like 2 current accounts and have that report on your credit report. You know, have no issues, have no errors. Don't go into, again, be educated on what an overdraft is and like don't overuse it or abuse it. And that's just a, very first step for you to at least have something reporting to your credit report. And then from there, you can probably get a credit card, which is usually going to be called a credit card builder, which is a very simple, basic credit card just to get you into the habit of borrowing on a credit card and repaying it. So again, you do need credit to get good credit. And another thing is a common misconception is that a lot of people focus on credit scores. So you can actually have an excellent credit score without actually having borrowed at all or having little credit history or repayments at all. But the key thing is not your credit score; it's your credit report. Because you could literally have a 999 with Experian, but if your name is spelled wrong and you apply for credit and you get rejected, that's probably the issue that's causing you to not be approved, even though your score is excellent. So I always tell people that the report is the most important thing. The score is secondary. You can have an excellent score but a poor report, and that's the problem. But you can have a decent score, an excellent report, and you'll be good to go, literally.
Okay. And another thing that I think people don't realize about credit as well, everyone tends to think about credit when it comes to borrowing to buy or borrowing to acquire something that they don't have the cash for.
Yeah.
But what I learned, funnily enough, is that your credit score or your credit report is actually factored in even for something as needed as rent.
This is it.
So even when I was going to, find somewhere to rent, my credit score started coming into. I was like, wait, hold on. I thought this was only for like when when you're going to get a mortgage or get a bank loan. I didn't know that you're actually going to use this to determine whether or not I'm a decent candidate to rent your house to.
Yeah. And that's true, because what it is it's the whole thing of like, if someone doesn't know you, they want to have an idea whether they can trust you. So if you wanted to, be a tenant and rent someone else's house, all that they really have is a credit report that would show for the past 6 years or however many years, this is what you've been doing. And if they're seeing late payments, defaults, they're probably not gonna want to, take the risk on you being their tenant. So yeah, it does play a factor as well with renting too.
Yeah, and funny thing is, I wonder, this is just something that I wonder, but when I was in like secondary school, this is how I imagine credit. Like this is how credit works in my head. When we were in secondary school, that there's always that guy that will ask to borrow money, or will ask, to borrow. Let's say that guy, will ask to, can you borrow him £2 for him to buy chicken and chips?
Yeah.
And then this is that guy that will never pay back on time. And then when you ask him for your money back, he will say that you're running him down.
Yeah.
See, that's another thing that I hate. I hate people that ask to borrow money.
Yeah.
When they ask to borrow money at that time, first of all, let's even just look at that. You asking to borrow money means that you ain't got money. And you know that I've got my money right.
Yeah.
Now, when it's time for you to pay me back my money, why are you angry about it? especially when you said, "Can I borrow it?"
Yeah.
And you have set the. Because that's another thing as well. You say to them, "When can you pay that money back?" Why don't you just say 6 months if it's 6 months?
Literally.
Say 1 year if you know it's going to be 1 year. But what they'll say is, "No, I'll pay it back by next week Thursday."
Yeah.
Next week Thursday comes and they haven't paid you, and they get upset that you ask them why haven't they paid you. But I digress.
It's raw.
Yeah. So credit will be like the guy that asks to borrow, never pays back on time, and then wonders why he doesn't get borrowed again.
This is it. Yeah, because it's particularly obviously if you're talking about big money, like even £100, £500, 1,000, 10,000, £500,000. Banks, lenders want to be repaid and ensure that they're not having any issues. So yeah, if you've got poor behavior, it will show. And unfortunately, if you've got a negative marker, it does stay there for 6 years, which is crazy. So yeah.
So
nothing like secondary school.
Yeah. Nah, but even that one, it stays in people's minds.
Yeah.
Because you know that if there's a guy that you've always borrowed money, next time he asks, you know you're just never gonna borrow him money.
Yeah.
So speaking of borrowing money, what do you feel about the whole notion of borrowing money? Because that is always a big issue as well.
Yeah.
Some people feel borrow what you don't mind to lose. Some people is like, look, just don't borrow friends and family money in the first place. Yeah. Personally, I believe that why should someone borrow you money and not get their money back?
Yeah.
You've asked it. They didn't come and volunteer that money to borrow to you. So why should it be now that, hey, if I borrow you this money, I should, feel like I'm losing? Like, that's not borrowing.
Yeah.
Gifting money and borrowing money are two different things.
Exactly. Yeah.
Like, what are your thoughts? Do you think that, like, do you see it as a bad thing? So if I borrow you money and you agree a time and day to pay back that money, and I ask you for that money back on this time and day, because you haven't actually done what you said you're going to do, are you the bad guy?
Definitely not. And because what you want to ideally show people and instill, even if it's your parents, like your friends and family, is the behavior or the habit that they already have. So if, for example, they're coming to you and borrowing £1,000 and they can't pay you back when they said they will pay you back, that probably means that when they go to borrow from someone else, their habit will be the same, and that will get them into trouble. So if you feel a way you want to let them off, what you're doing is allowing them to continue that habit or behavior, where if they now go borrow, 10K and can't pay it back, this is going to have a negative impact on their lives, you could even say. Because again, if you wanted, for example, live somewhere and you wanted to get a mortgage to move to a different place and the bank are saying no, or the lender saying no because of your credit history, then, it's not ideal. So you ideally, though it can be difficult in the time to say, or to be, you could say harsh or to be on it at the time, you just want to give people the right message that if you borrow money and you say you're going to repay it, you should honor your word, literally. So be a person of your word. It's super important.
Cool. Yeah. And with credit cards, where are people going wrong? Yeah. Because the amount of credit card debt and consumer debt right now is through the roof.
Yeah, it's crazy.
Now, what are people missing? Because to me, whenever I had a credit card, I never ever saw that credit card as extra money.
Yeah.
I just saw that as rewarded money.
Yeah.
Or protected money.
Yeah.
So for example, if I've got £2,000 in my bank account and I buy something for £600, if something goes wrong, the bank's going to say that's your problem. So therefore, how I saw a credit card was, hey, look, this credit card has a 2K limit.
Yeah.
Let me buy the thing for £600.
Yeah.
I've already got the £600 in my account as of right now. However, they're going to give me 30 days. I'll just wait the 30 days for the sake of it and then pay off that credit card. Bingo. But in the process of using that credit card, the item that I've just spent £600 on is protected. So let's say I don't get that item. I can go back to the credit card company and say, hey, I need a refund because I didn't get what I got.
Yeah.
Whereas if I'd use my debit card, they'll say, sorry, that's your problem.
Yeah. Therefore, so the protection that comes with credit cards is very important. And again, I think because the difference between people that see it as free money versus knowing that it's borrowed money is always going to be education. Because a lot of people, when they first heard of a credit card was when they went to uni. And again, because we don't have financial education in schools, when they see this free money, see this 0% overdraft, see these student credit cards, they're thinking free money. They literally splash the whole thing and think that nothing's going to happen. And again, because there's usually 0% on those student credit cards or overdrafts, it's fine for a time. But once they leave and they're thinking, oh, why is this? What's going on? My credit report is not good or my credit score is affected. Probably because, again, they were not educated. So they saw the money as free and they built negative or not ideal habits and behaviors that's unfortunately giving them trouble till till this day. So again, education is the key.
So, and
So important.
who's responsible for this education? Because
That's a
we already know, yeah. Because to me, this is how I see it.
Yeah.
There's what we'd like ideally for, like, financial education to be part of the
Yeah.
curriculum and all of that, which would be good. But let's be real.
Hmm.
How would it benefit because that's what you've always got to think of,
Yeah.
right? There's something that you want, but you got to think of, how does it benefit the person that you're asking to do it?
Yeah.
How would it benefit the government for everyone to be financially savvy, for everyone to know these things?
This is it. And again, I've looked at this a lot of study and research, and I think unfortunately, I believe it's intentional that people are uneducated, because if you can put them in a bad financial situation, you can actually control them and have them do things that they want to do, work longer than they'd ideally want to work. So yeah, I believe it was intentionally kept out of the formal education system, and it probably won't change for a long time. And even if it does, it's probably going to be too late. So all we can do, and again, I think people that are actually educated are those who have it in their family. So, and that's why they always say the rich gets richer, because once you understand finance, you of course will teach your kids. Why would you not teach your kid how to, borrow, how to leverage this credit card, how to use it, get all the reward points, how to use it to start a business? You would. Once you know, you spread the word. But in houses where there's no money talk, nothing of credit, nothing of debt talked about in the house, or even where there's negative experiences, and that's then kept away from kids and not taught, the wealth gap only continues to get wider and wider and wider. So yeah, I don't think the government have much interest, unfortunately, for now anyway, until something comes up to teach kids about
Fair.
money.
Yeah, and just touch on what you just brought up there.
Mm.
You said that in households it's not
Talks about.
Why do you
money.
think, especially in the Black community, is money not spoken about in households?
Yeah, because I think the experiences are usually negative. So the connotations of what money is, or how to make it, or why it's difficult, it's usually not positive or good experiences. So it's almost like, for example, let's say if you like food and have good experiences of food, of course you'll talk about food and give your kids the food and give it to all your friends and family. But if you've had negative experiences of a certain food, you're never going to talk about it. You will never make it. You will never share it. And I think that's what's happened with, unfortunately, money and how it affects our community in particular. So that's why us that know, have to do even more and push to teach people about the importance of money. Because again, money is something that people think about every single day, usually affects the job that you do, and the decisions that you do or don't make, where you can shop, what you wear, what you can't wear. So yeah, so important. So important.
So then, that being said, if parents want their kids to do better than them, as the saying goes, right? You always want your children to do better than you.
Yeah.
And you've had a certain relationship with money, and you know that you spend most of your waking day getting this thing money. Why is there this notion or belief or popular narrative of, oh, money is bad and, money is not everything, which is not.
It's not.
However,
yeah,
that saying is always said, because to me, it's like, I've never heard, it's like, you never really heard of rich people say money isn't everything, or money doesn't buy happiness, or, do you know what I mean? They never have those kind of sayings. It tends to be people that tend to not have money that really hold on to that.
Yeah.
So the question I have is, why aren't they sharing maybe the experiences or hey, if you go down this path, this would be the outcome with their kids or with their family? Why is it not discussed? Like, why aren't people discussing it so that they can do better at it?
Yeah, I think again it comes down to like experiences, but the main thing is the beliefs. So belief, like, what is money? Is it good or is it bad? Is it neutral? Like, if you have the wrong belief about something, unfortunately, informs and directs how you talk about it, whether you share it, whether you don't. So I think what rich people have seen is that, of course, money can help you do things. They've seen the good it can do. They've seen how it can benefit. They've obviously, of course, seen the bad as well. Money's not perfect. It's a tool that you can use to, do A, B, or C. But because people that are rich have seen what money can do, they therefore talk about it. People that are poor, they don't tend to understand, first of all, how important money is and how it does A, B, and C. So they therefore just don't talk about it. So I think, having the incorrect beliefs is what holds people back from sharing it. But also, I think not having the confidence as well. Because if, for example, you've had negative experience with money or debt, but you don't know how to correct your kid or teach them the right way, you won't feel empowered to talk about it at all. You just want to keep it to yourself, or just hope for the best and hope that they find it from school. And if school doesn't teach it and your parents ain't teaching it, then unfortunately
Then
kids
who's
are just
going to
not.
teach it?
Yeah, no one's being taught.
So
So
then,
it's crazy.
what about? Because that's funny you say that, because in my head, yeah, it's like, is there also an element of shame attached to it? Because think about it,
Definitely.
if you start talking about money,
Yeah,
inevitably, somehow, some way, your money's going to get dragged into the conversation. Now,
definitely.
do you think that there's a lack of conversation around money because there's so much pretense going on?
One.
And speaking about money will reveal how pretentious your life is, or
Yeah.
how unwise your financial decisions is. I'll give you an example.
Mm.
Let's say we have person A, yeah, that looks the part.
Yeah.
So they have the car, the watch, this, the that. But if we start talking about money and we start comparing what actually comes in
Yeah.
and what goes out, and then we
Yeah.
look at those things that your outgoings are on, it's going to present a picture.
Yeah.
And that picture is either going to say your priorities are right,
Yeah.
and it makes sense, you know, what you're doing.
Mhm.
You can, or it's going to paint a picture saying, oh, you've gone for image, but it's hurting you to do so. So now it will question and scrutinize the fact that, is it really worth putting 25 to 50% of your disposable income on XYZ
Yeah.
product or good, or
Yeah. Liabilities usually. Yeah. So yeah, I think it's raw because money's a weird one. Definitely in the UK, we don't like to talk about it. Again, we don't get taught about it. So there's just a lot of, taboo. It's just very taboo. People just don't like talking about it. They feel away. A lot of people assign their value or meaning or purpose towards things, assets. And if you ain't got assets and you're indirectly taught that this is your value, then you therefore don't want to talk about your value if it's low. But if your value was high,
you wouldn't have a problem now,
you would not have a problem at all. You'd be talking all about the houses you have and all this kind of stuff, and you would unfortunately try to wear it on you. Whereas those who are really wealthy, you will see that they talk about money differently, and they're more likely thinking about ideas. Therefore, money is important, but usually like how to multiply money or what to do next or other things, experiences more so than just like a car and a watch and all these things that people get lost in. So yeah, it's a big one, and there's so much work to do, But I think it's very intentional. I believe that a lot of people just have no clue where to start with money. So many misconceptions. It's worrying.
So then that said, yeah, who's responsible? Because let's say we've got a scenario where you over time have learned all this about money, right?
Yeah.
And let's say your parents aren't necessarily on board or savvy like that, and they still have an outdated mindset.
Yeah.
Is it on the child to go and educate their parents, or is it supposed to be, look, just hope that your parents get the education, because after all, they're supposed to be the ones passing knowledge down to you?
Oh, it's that, and that's a real difficult one. I think so. One thing, and it's difficult. I think as a child, when you first realize that your parent maybe wasn't the most financially educated, and then you educate yourself or are educated by someone else, you usually want to get your parents to like believe and listen and understand. The unfortunate thing is, though, you can't force someone to believe something that they don't want to hear or that they're not ready to receive. So you have to almost be open to wait for them to become ready and almost like try to plant seeds. So tell them one thing, tell them one thing, tell them one thing. But what a lot of people would want to do, and this has happened to me as well, when you find out, you just want to be like, listen. What we've been believing is a lie. This is how money really works. This is what it really is. So that's difficult. But the truth is, if someone needs something but doesn't want it, and you want to force them, you're only going to chase them away. But if someone ideally needs it and wants it, then you're in a good place. So you can literally now tell them and show them the truth. So it's difficult, but you have to work with them and not against them.
Cool.
Yeah.
Now, everyone's heard of good and bad debt.
Yeah.
How real is good and bad debt?
Very real. Very real. And it's not necessarily that the debt itself is good or bad. It's more so how you use the debt. So again, remember, debt is about borrowing money. How are you going to use it? So for example, it's like you can give 10 people £10,000 and they would all use it differently. Someone with a rich mindset would ideally look to multiply that money. People with a poor mindset would usually look to just pay their bills or just spend on things that they usually couldn't afford. And this is what you see whenever most people that win the lottery. What you would hear is that they've squandered all the money, and it happens over and over and over and over again. Because if you don't educate someone how to manage their finances, and you give them so much that they've never like even conceived having £1 million in their account, they're gonna end up losing it. Or some people just actually end up holding it to themselves and holding it onto it forever
In the fear of loss.
in the fear of loss. But again, because of inflation, most people don't know what inflation really is. But because of inflation, the value of the money will go down. But some people don't even realize that. Literally, if you don't do anything with money, it literally loses value every single day. So, education again, it's the key, man. It's the key.
So, quick one. For those of you that don't understand what inflation is, inflation, best example I can give you is take a Fredo chocolate. A Fredo chocolate used to be, what, 5p?
Mhm.
Today, a Fredo chocolate is like, what, 25p?
Yeah,
It's the same chocolate.
Yeah.
So that means that once upon a time, if you had £1, the value of £1 at the time where Fredo chocolate was 5p
Yeah.
would be able to buy you
20.
20.
Yeah.
20 chocolates.
Yeah.
Let's say you didn't do anything. You just stored that £1. You kept that coin forever.
Yeah.
And 5 years later, you said, okay, cool, I want to use this £1 again to buy Fredo chocolates. I used to buy 20. I should buy 20 now.
Yeah.
5 years later, that £1 that used to be able to buy 20 chocolates can only buy 4.
Literally.
So as you can see, the power or the purchasing power of that £1 has drastically dropped.
Yeah. Crazy.
That's inflation.
Yeah.
So what you need to do is have your £1 multiplying at the rate of inflation. So as that Fredo chocolate is going from 5p to 25p,
Yeah.
your £1 needs to go from 1 to 5.
Yeah. Literally.
So that you can have an equal purchasing power at all times.
Yeah. That's right.
Perfect
That's right.
explanation of
Perfect.
inflation.
Yeah.
Perfect. Hopefully they've understood that.
Yeah. Literally.
So because obviously we like to be positive and we like to give, strategies, steps, and things that people can actually practically do to change their situation.
Yeah.
Now that everyone knows that not everyone, but now everyone that has bad credit knows that they have bad credit, which is obviously not new to them.
Yeah.
They're probably thinking, what can they do to improve that? So what are some of the things that can be done to literally, take your credit from poor all the way, or very poor all the way to excellent, like me? Before I start saying what I did.
Yeah. So the first thing to note, and again, it's all about education. There's so much to teach about it, but just to not make it too complicated and just to make it simple. First thing is that we all have 3 different credit reports and 3 different credit scores in the UK. There's 3 main credit companies. So you want to know that there's Experian, there's Equifax, and there's TransUnion. The first thing you want to do is download your reports and monitor and review all the information in there. So check your name, your address, and your date of birth. Ideally, there are no errors. If there's a single typo, if your name is missing a letter, if your surname is different and it's not common to the UK and it's incorrect, it's not your fault, but it's your responsibility to go and check and make sure that there are no errors.
It's not your fault, but it's your responsibility.
This is it, which is the harsh truth. So review your 3 credit reports and make sure that there's no errors. That's step number 1. If there is an error, then you just need to make sure that you contact the particular lender or the bank who has incorrectly reported your name or your address. And it can even be the credit company as well. So if Experian have your name wrong or your address is wrong, contact them and ask them to correct it. And then going forward, when you are now looking to apply for credit, ideally, it should be a lot more smoother. But that's just one step. There's a lot of different issues, or there's a lot of different issues that can come up or come about for people. But that's therefore step number 1. You have to review your reports and make sure that there's no errors.
Cool. Reviewing reports. What about what to do if I have poor credit? How do I get myself a credit card so that I can start building back my credit?
Good question. So it depends. So assume you've got never had a credit card.
Let's say I've never had a credit card.
Yeah.
My mom's taken out a contract in my name. Now my credit is bad before I've even had a chance to even get a credit card.
Yeah.
I can't, just rock up to American Express and get one.
No chances.
What do I do then?
Yeah.
In order to build that credit so that in future I can move forward.
Yeah. So again, I would always say everyone's situation is different. So this may not necessarily apply to every single person, but something that could work for someone is, let's say, okay, they've not got a credit card. Their mum has done something in their name, which is terrible, but it does happen. You first of all want to find out what's been reported. Because let's say, for example, there's 20 late payments on your credit report. Yeah. That's a lot of work and a lot of things for you to do. Versus if there's just one late payment, then that's a lot more bearable. So first of all, checking your report and seeing what's on there. And if it's not too bad, one thing you can do, and what's happening a lot, is that there's a lot of pre-approval software and apps that you can look into. So for example, you could download Credit Karma, for example, which gives you your TransUnion information. and just see the credit card offers that you would be offered without doing any hard credit check. So this literally gives you a hint, an idea of
As
some
to
of the
who will say
cards
yes from the beginning, so you don't have to take the risk
of applying and like having a rejection, because a rejection you just don't want it. It's a waste of time. I did just want to be approved for credit. So once you've checked your credit report, once you've seen how bad it is, if it's not too bad, then you can look to see what cards you'd be offered. If it is very bad, then we need to work on what to do, basically. And there's different techniques or hacks that we can look at to fix that person's credit, or at least just get them a credit card for them to start building on a poor start, which happens to a lot of people.
What can parents do to give their kids an advantage when it comes to credit?
So one thing parents can do is try to open current accounts for their children before they turn 18.
What's the youngest age you can start that?
So it depends on the bank or lender, but as young as like 7, 10, 13, there's like kid/student accounts that can be opened. So let's say, for example, if Halifax had a 13 year old account, if you open that for your kid, when they turn 18, what's good is that they will now have a current account that's reporting to their credit report. Whereas if you never open a current account for your kids, then what would happen is that when they're 18, nothing is reporting and they're just literally starting from a blank slate, which is not bad because, of course, it's not as bad as having late payments or default, but just give them a head start as a parent. You can just literally look to open up a current account. But then what's more important than that is the education, because if you give your kid a current account, and let's say you put some money in there and they don't know how to manage their finances, they're going to end up, wasting all the money, unfortunately. So education and just getting them like a current account that will end up reporting once they're 18 are powerful things that you can do. And again, just like you can literally do 2 accounts, teach them how to use it, and that's a very good start for an 18-year-old to get started on their journey.
Oh, and is it true that you can put your child on your credit card?
Yes. So a lot of this you hear about in America. In the UK, it doesn't really work like that. So I think you're referring to like having like authorized users and adding people to your credit card. So yeah, that stuff doesn't really help or work in the UK. So you're literally just going to know that is when you're 18, that's when you can start. The best thing that you can do for your kids is get them a current account that will end up reporting once they turn 18. Yeah.
Okay, so you actually can't. So you're saying that you actually can't put them on your credit card as an authorized user?
No, so not that you can't. There's some banks or lenders that do allow you, but they refer to it as like literally just having an additional card in someone else's name. But what I've found is that it doesn't actually help anyone's credit. So, for example, let's say you're married and your wife has no credit card, and then you add her to your credit card with Halifax, for example, it won't be reporting to a credit report. So there's actually just literally no point in doing it.
Okay.
I would say, when it comes to improving your credit score. But if you're in America, then that's a different story. But in the UK, it's not like that yet. Anyway, maybe it will change. But
So the UK aren't as nice. I mean, they're not, because it's even like life insurance.
Yeah.
In America, you can have cash value life insurance. In the UK, there's no cash value your life insurance.
Yeah, I've heard about that as well.
So yeah, UK is a bit stingy.
It is. Hopefully it changes soon, but until then.
Fair.
Yeah.
And what about people that have negative markers and they're like, well, if it's going to stay on for 6 years, then there's no point in me doing anything about it. Is that the right mindset to have?
Definitely the wrong mindset to have. Because again, once you're educated and you understand how powerful credit is, you will see why you don't want to just stay out of it and not work on your credit. So if, for example, you've got negative markers, there's something called a notice of correction, which is essentially like a note that you can add to your credit report to explain what's happened. So in that example where you said, let's say there was a child whose mum got a contract in their name and then they got late markers. One thing you could do as a child is, again, check your credit reports, see where it's reported. Is it on Experian, Equifax, or TransUnion? And then with each credit report, because again, with each credit company, they're all independent. Experian is not talking to Equifax and they're not talking to TransUnion for them to now have correct information on you. All the responsibilities on us individually to make sure that our information with them is correct. So if, for example, it's only reported on Equifax, for example, you want to now add the notice of correction on your Equifax report and explain what happened. And what that then means is that rather than having an automated application for a credit card or a loan, for example, it means that the bank or lender has to do a manual assessment and review a credit report to now see that, okay, this is what happened. And they will therefore then make a decision based on what they see rather than just being like an automated yes or no. So that's that notice of correction. And I stumbled upon it by luck when I was young in uni. That notice of correction is very powerful, very, very, very powerful. Because it literally means that you can literally be approved. Whereas alternatively, if it was automated, you're usually just going to get rejected if you've got like 20 late payments on your report. So very powerful.
Okay. And when is the right time for someone to get a credit card?
The right time is when you're educated. So if you don't know what you're doing, you're just going to get burnt. And again, the best way I've heard credit described is credit is like fire. If you know how to use the fire well, you can make amazing food. You can make jollof. You can make fried rice. You can invite people over. But if you misuse that fire, you will literally potentially burn down your house. So once you're educated, look to get a credit card and then learn about, these reward cards, some of these, high limit cards, and then use it to your advantage.
Cool. So let's talk about that because people love the exciting stuff.
Love it.
What are some of the rewards that you can have?
Yeah.
Obviously, I know the answer because I've got multiple Amexes, but I'll let the credit and credit expert tell us about some of the reward cards out there.
Yeah. So the best, let me not say the best, but there are reward credit cards out there that literally reward you for using their card and give you what's called points. So you can literally rack up points by using a card and paying it off. Now, the reason why it's popular, but it's not, I wouldn't say it's like every single person knows about it. The reason why Amex does this or Virgin, for example, have these cards is because they know, I want to say they know, let's say they probably assume that they will make more money people that don't know how to use credit versus people that know how to use credit.
No, that's the fact. They know that because if you don't know how to use credit, then obviously you're not going to pay back in full, and obviously you're going to incur interest. It's not. They assume they know that we're going to make money off the people that misuse the card.
Unfortunately,
because that's how it's designed.
Yeah.
And then there will be more of them than the people that know how to use the card.
Correct. This is it. So these reward cards, for those of us that again are educated and then use it well, what we can do is intentionally use these cards not to buy things that we can't afford, but to buy things that we can afford, and every single month be paying off the card. And what we're getting as a benefit or as an incentive is the reward points, which you can then use for, flights, but all hotels, where you can literally save thousands of pounds as opposed to you like saving up your hard-earned cash to fly once a year, for example, on economy. You can literally use points to fly first class, and that can be cheaper than economy, literally, if you know how to literally rack up points, use it well, and be disciplined. So, the raw credit cards, powerful.
So not everyone on first class or business class or anything have paid full price?
Definitely not. Definitely not. I kid you not.
Some people are leveraging what's available to do it well.
Yeah, this is it. And once your mind is open to it, you are like, oh my days. If only I knew this.
Yeah, because the big thing about these reward points is that how I see it is I was going to buy, like, if you use credit cards properly, you could actually get so much benefits. Because to me, an example of what I use my credit card for is like, let's say Tesco shopping or shopping in whatever supermarket I'm in, petrol, anything that I was going to buy anyway. Because it's like, look, I was going to buy it anyway. I might as well get points for something that I was going to buy. So it's kind of like how sales work. It's only a sale if you were going to buy the item at the full price anyway.
This is it.
It's not a sale for you anyway.
Yeah.
If you have no intention of buying this thing, but today they said, you're saving £100. You're not saving £100. You're spending £100.
This is it.
But you're telling yourself you're saving £100. You're only saving £100 if, I was already going to buy this thing for 200, but by the time I got to it, it's 100. Great. I've actually saved money because I was already prepared to spend 200.
Yeah.
And it's kind of like how the reward points works. It's like, look, I was already going to spend £60 in the petrol station. I've spent it now, but as a result, I've got 60 extra points that, eventually is going to pay for something else.
Yeah, this is it. Powerful. And that's the right mindset to have, because people also get into the trap of then overspending to rack up points, which doesn't make sense, because a point is not worth £1. Points are usually worth less. But again, unless you build it up and like really go, ham and like get 100,000 points or 200,000 points, you're not going to benefit if you fall into the trap of just spending to earn points. You ideally want to just be going to spend anyway, and then from there benefit from the point system. So again, if you understand how it works, like, you can literally save so much money and then use it to your advantage. So very powerful.
Cool.
Very powerful.
So that being said, what can you do for the people that want to, improve their credit? They want to say, right, I know that my credit is not the best, and I know the impact of not having good credit. I also know the impact of having good credit, and I want to tap into those benefits. How can I improve?
Yeah, so again, first step is, okay, cool. Your credit report, review your credit report, see what's on it. Whatever's on it, then attend to the negative markers. If it's all good and you first, for example, don't have any credit cards, you want to then look at, okay, what first credit card can I get to start using responsibly to start to build my credit history? So if it's your first credit card, you usually want to start with a credit card builder, one that's just very basic, very simple. You're not using it to buy something that you can't afford. You're using it just to show that you can borrow and repay. So, for example, if you open let's say a Capital One card and they give you a £500 limit, you want to use a low amount of the limit and ideally pay off in full every single month. Now, one trap that happens, and I've seen it so many times, is sometimes on these apps or even on the statement, the first thing you will see, unfortunately, is minimum payment and not full balance or statement balance. And a lot of people, unfortunately, and this is what happens when you first get a credit card as a student without education, you spend it on a credit card and then you see what's due is the minimum amount. And because you don't have the education, you're just thinking, oh, wow, this means I only need to pay £5, even though I spent £500 on this card. That's the trap you don't want to fall into. You need to know that to avoid interest, you want to clear the balance in full every single month and don't fall for the minimum payment trap. Because if you do, you will have to continue repaying them and be charged a lot of interest over however many months or years it will take for you to clear it off. So that's so important.
Cool.
Yeah.
Talk to us about credit utilization.
Oh, big one. So your credit utilization, it compares your credit limit to your reported balance, not your current balance, but your reported balance. So let's say, for example, you've got a limit of £2,000 and your reported balance is £500. What that would show on that one credit card is that your utilization is 25%. 25% is good. That means that you're not using too much of your credit. It doesn't reflect as though you are over dependent on credit. Now, even if you use 50% and you know that you don't need it, but you just, for example, just spent 50%, remember, banks or lenders are not going to call you and ask you what's going on. All they can see is what they can see on their screens. So you want to know that you could say it's a game. It's the way they think. It's the way it's the rules. It's the way it works. Banks or lenders are only going to see what they see and therefore judge you or judge your behavior, should I say, based on what they see. So knowing what they want, knowing how to move according to their rules is very important. So having a low usage, which is a low utilization, is something that's very important. If you max out your credit cards, personal credit cards, even if you can afford it, it just doesnn't look good, particularly if it's reported to all the credit companies. So utilization, one of the most important factors that affects your credit. So important.
So let me get this straight. Let's say we have $2,000. I spent $1,000 now.
Yeah.
So let's say the report happens on the 25th.
Yeah, of the month. Yeah.
Of the month. Every month, right?
Yeah.
Let's say I know that and I spent 1,000 out of 2,000.
Mm-hmm.
If I pay off, let's say 800 on the 23rd, so that by the 25th, when it gets reported,
it would only then show.
It will only show 10% utilization, right?
Yeah.
So that's how I could technically almost finesse the game in terms of I can, not abuse, but I can use I can really use the card.
Yeah.
However, still not get penalized for high utilization.
That's
by paying it off in time, so that by the time it's reported, what they want to see is on the card.
This is right. Perfect. So this is where we're going to more advanced strategies. But again, if you could figure out when's the reporting date of this particular bank or lender, because again, with each bank or lender, they have different rules. So Tesco have their own thing, Sainsbury's have their own thing, Barclaycard have their own thing, HSBC, M&S, you name it. They have their own rules. So if, for example, you're using an M&S card and you know that they report at the end of the month, every single month, then you can literally do that where you use 50%, pay it down before it's reported, and then you'll be fine. But these are advanced things that, unless you're comfortable and know what you're doing, or you're a part of my community, then you don't want to make the mistake of thinking, oh, I thought it was the 25th, and then you see that it's actually the 22nd, and you're like, oh,
you missed it,
and then it's reported. It's too late. Nothing you can do, and that's 6 years, on your report. So
that's jarring.
Yeah.
So credit utilization,
big one.
What else is there that people maybe might have missed? Or
there's so many things. I can literally go on forever, but so your utilization, I would say, is usually the second most important credit factor that impacts your credit scores anyway. Your credit scores.
What are all the credit factors first?
All of them? There's quite a lot. Some of them that I can literally name off the top of my head. So the most important when it comes to your credit score is going to be your payment history. So if you're paying on time, then you're in a very good place. Your utilization is super important. The mix of credit that you have. So if you've got credit cards, current accounts, loans, mortgages, if you have all of this on your credit report, that looks very, very good versus someone that just has credit cards or just has current accounts. The person with the mix looks a bit better. What else is important? Or the key credit factors. I'm trying to think. There is other ones. Your total limit, how much limit you have in total. So, for example, you've only got £200 versus someone that has 15,000. And the person with 50,000, if they're managing it well, that looks so much better than someone that literally just has £200. But again, of course, you don't just want to jump there if you're not ready. Get educated and then get to that level where you can manage, 15K in personal credit. What else is important? I'm trying to think. Having a mortgage is something that tends to be highlighted because, again, if you can borrow 300K and you're repaying every single month for 30 years, or even if you're in your 10th year, then that looks very good. There's therefore more, but those are some of the important credit factors that impact your credit scores.
Cool.
Yeah.
Is there anything else that everyone should know when it comes to credit that we haven't touched?
Oh, there's so many things. So many things. With credit, so with credit scores and credit reports, again, the most important thing is your credit report. That's more important than your scores. But even with each agency or each company, Experian, Equifax, and TransUnion, we all have 3 different scores, which a lot of people don't know. So Experian will rate you out of 999, whereas TransUnion will not rate you in the same metrics, the same overall figure. So TransUnion is only going to be out of 710. With Experian, it's 999. So if you've got a 600 out of 710 with TransUnion, and you've also got 600 with Experian, you've only got an excellent with TransUnion, not excellent with Experian. So knowing that's super important. So again, look at each credit report that you have in isolation. Don't see it as a whole group lump sum because they're all different. They don't talk to each other. And what makes Experian happy may be different to what makes TransUnion happy. And again, for those advanced strategies and knowing what to do, that's more of the things that I go through with people that are literally interested to know more about how to utilize credit and max it. So, yeah.
Perfect. Well, I think we've learned quite a lot. So if people want to find you, Josh, and they want to join the community, they want to, get the advanced strategies and have someone literally sit them down and help them with everything regarding credit and improving their credit, what can they do?
Yeah, so socials wise, you can follow me on Instagram. My handle is finance by Kilolu. So finance by KILOLU. If you want to learn more,
will be down below anyway.
Yeah, hopefully because there's quite a few. If you want to learn more for free, I've got a free Telegram channel where I try to post on there every single day and just post a lot about credit, about taxes, about business. The link to that will be found in my Instagram handle as well. And if you're someone that's serious and wants to learn more about these advanced strategies or just improve your credit for whatever reason, then we have a school community that you can join. And again, that can be found in my Instagram bio for you to potentially join. But again, if you don't want to pay yet, you just want to learn for free, Instagram or Telegram on the platforms where I just share free content and teach people about all this credit stuff. So yeah, it's a lot going on.
Sweet. Well, there you have it. We've had Josh, everything regarding your credit. He's the guy to speak to. And of course, my podcast, as a client of mine that's actually done their life insurance. What do you have to say to people that are in 2 minds about life insurance and what your experience was and just everything on the whole for you?
Big one. So yeah, even me, it took me long to find out about life insurance. I'd always hear about it. I would say within the last 3 years, but only recently did IO really help me to see the importance of getting life insurance now. So doing it with IO was super simple. We literally did it within 30 minutes, I think it took. Answered all the questions. Thankfully, my health is good and everything's fine. So that was a very easy process. And got covered for, what was it, six figures covered?
Yeah.
Coverage for me and my wife as well. So both of us are now covered. If anything did happen to us, then thankfully our family and friends won't have to worry about having to cover funeral costs. So life insurance, I would highly recommend it. It's not even a thing of trying to sell you something or trying to manipulate people. This is something that you need to ensure that your friends and family, when you do go, because again, we're all going to die at some point, that you don't just die for free, that you don't just leave people in a bad financial situation. Because this happens every single day. People die, but they don't know. Of course, most people don't know when you're going to die. So don't assume that you're going to live forever. Don't wait till you're 40 and it's all figured out for you to now get insurance. If you do it earlier, you'll save a lot of money and you'll be at peace of mind knowing that this has been sorted when I was young and there's no need for me to not worry about this now. So life insurance, highly recommend it. And if you're someone on the edge, please just know that it's important to get it now. And I'm very grateful to Al that he's helped me to get it sorted. So thanks, man. Definitely appreciate it.
No worries, man. Well,
Definitely
you
appreciate
heard it from him. I didn't say it. He's keeping it real, isn't it?
Have
Because
to.
there's a lot of misconceptions around it, right? And it's like, if I say it, it's like, yeah, of course you would say it. And it's like, look,
It's real.
it's going to be your family on the day, not mine.
Yeah.
So
Yeah. And I honestly believe, like, again, if you were taught about money in school, it would be a no-brainer. I think, unfortunately, and this is a lot to do with, like, programming, like people's automatic thoughts. When we hear life insurance, we tend to have the wrong thought towards it automatically. So if you see it on an advert or wherever, it's already a turn off. But again, with education, with reprogramming yourself, with having the right information, you will see that life insurance is not negotiable. It's not a joke. It's not something that you just get if you want it. It's like, it's a need. But as I was saying before, with like a parent that doesn't want to know yet, if someone doesn't want it and they need it, we can't force them. So all we can do is literally educate, and help people see how important it is. So life insurance, it's not a joke, man. Get it yesterday, honestly. So important.
there you go.
So
Well,
important.
at least you know that you're going to get a top tier education from Josh when you join his community.
Yeah.
Like he says, he has a free community that everyone can join, get started on their journey to building their credit. And yeah, I think you're definitely going to be in the best hands. So thanks again for joining me today
Thanks for
on
having me.
Inside
Thanks for
IO.
having me.
Just thanks to everyone that's watched this episode. Don't forget to like, share, and subscribe. Of course, there'll be more and more content. The more subscribers we get, the more likes we get, the better the content can be, and the more amazing guests like Josh we can have on a more frequent basis. But other than that, you guys have been amazing. It's IO again on Inside with IO. Peace.
See ya.